Hi there, traders. This is Brad Gilbert with the weekly kickoff. Now, the news service is just more doing a bit of a summary, right, of what's been happening. Dollar poised to finish week higher after inflation data. But I tell you what, it's actually rolled back quite a bit. And this is going to be a key part to understanding how the Christmas markets work, right? The trends are in play, but you are going to see them come under pressure, right? The dollar strong for many reasons. The main one being the Fed has moved to sort of more of a neutral stance on rates. And that's like getting an interest rate hike for those that sort of don't understand how that sentiment can swing. But you know what? The dollar has drifted lower. And why is that? I mean, the equity markets got absolutely belted after the Fed meeting, but they are sort of recovering a bit, right? Even early US equity futures are up, and that's going to take global equities up as well. But alongside that, and this is where it gets a little bit confusing, is the US Treasury yields are also up. That means stronger dollar, right? So when you look at the major currency pairs at the moment, it's a little bit undecided here what's going to happen. Either the US equity futures go down or the yields go down. I can't see the yields going down. So I think this is just a retracement of the big down moves following the Fed last week. And we are going to start to see, well, we should start to see the Fed come into play. Actually, let me just come back into that. Let me just give you a look at the calendar and I'll come back in where the focus is. Now, Monday, the final GDP numbers, you know what, they're usually pretty close to the mark. But if you're in the UK and you're desperate for a trade, maybe have a look at that and see if there's any momentum that comes out of those numbers. You come in on Tuesday, I mean, US consumer confidence, Bank of Canada summary of deliberations, RBA minutes, Bank of Japan minutes. It's a bit of a summary day, right? To me, a good historical number to sort of focus on for a bit of dollar direction would be the US durable goods, okay, on the 23rd. And then you've got new home sales. Now, as you go through the holiday break here, right? And I'm talking between sort of Christmas, New Year's, there are still things coming out, right? You can potentially jump on some of these. But ideally, what we're looking for is for the trend to line up. To me, the markets have the chance to be activated by the US durable goods. So on the 24th, the forecast is minus zero point 0.2, and there's your range, minus 1.5 to 1.6. So ideally, going with the way the Fed is now sitting on the bench, if we get stronger numbers, that just confirms that. And the dollar should continue that uptrend, right? So for me, stronger numbers are a better outcome. And right at the moment, I know we're a few days away from this, but the dollar index, dollar yen, and dollar CAD would be the best pairs to buy. And you'd be looking to sell sterling, Aussie, and Kiwi at this point, right? All those pairs are trending quite nicely. Now, through that Christmas, New Year break, we are basically having a break at Traders for Traders, but you will see updates, right? And we'll broadcast these updates when they occur. Just so you can keep track, we've sort of reverted back to the original structure of analysis, make it a little bit easier to see what's going on. Usually if both pairs are going down, of course it's going to be bearish, and likewise for bullish. The signals, we'll update those as much as we can. We do hope to have this whole table automated by early January, and we have actually put in here active, right? So short sterling at the moment, long dollar yen, and that's just for the majors. And with the crosses, I've had a few questions about this. What are you selecting, buy and sell? Which pairs are doing what? Well, this is where both short-term and long-term direction line up, right? The crosses can be a bit fickle, but if you get both short-term and long-term trends lining up, well, you've usually got a better trading opportunity. Euro Swiss got an early sell signal there at the moment, but that's where you can keep track. If you've traded the crosses, maybe just flick over and check, but don't forget to check the last update time, right? So through the Christmas New Year break, just keep an eye on the update time. Make sure you are trading with valid data. All right, so that's where we are. So we will be updating the site as we go to keep you informed with where the main trading opportunities are. Now, just on top of that, we had the last week and a half or so, we had loads of central banks, right? Now, the key central banks of the major developed countries, We don't have anything out, right, for some time. So this is where I think the trends can come back into play. Now, if you look at the hourly charts, there's a lot of noise here, a lot of whipsawing about. There's a lot of pressure on, say, like dollar Swiss, right? It's just moved back down here. Like maybe it was overbought, maybe it wasn't. But keep an eye on your daily charts. This is where you're going to see some potential opportunities, right? And you look here, the dollar pairs on the long-term trends are still gyrating topside without any problems. So, and that has the dollar block, euro, sterling, Aussie, Kiwi floundering, right? Over this break, there are opportunities, especially for Prime Time Pro. And we will get that rolled out to you as soon as we can, those traders that have already purchased it. The All we're waiting for is the short-term trends to sort of line up, and we've got good trading opportunities here. And that's where the economic data comes in. Definitely, you can be looking here. I like US numbers, right? Because the US dollar is driving everything. So US consumer confidence numbers, definitely worth a look. And then obviously, as I highlighted there, the US durable goods this week. New home sales, sure. But don't forget, during the Christmas New Year period, liquidity is pulled out of the market, right? It may only be for a few days here and there after Christmas and then after New Year's, and then liquidity will come back in. So you can see some fickle moves. We might see some sideways movement if we don't get the strong US numbers, right? But there are some opportunities here. It's worth having a look and really fine tuning your analysis skills over this break. All right, guys, that's it from me. That's the weekly kickoff. I'll give you a rundown of what to expect today. But all the best. If we don't speak to you or you don't hear from us, we will be back bigger and better next year, obviously, with a lot more tech, less tech issues, more tech to work out what trades to place on the markets. All right, guys, have a good one. All the best. Cheerio.